Good evening. This is Luke for Project TerraHash. I'm broadcasting February 3rd, 2018. I'm going to make a video today about a couple of topics that are relevant to Bitcoin. I'm going to try to keep my videos and vlogs about 10 minutes tops per dissertation. I'm going to tag them to my websites and my blog so that you can affiliate sort of my face with the information that I disseminate. Okay? So let's get started. Let me grab my notes. So first off today in the news is all the information about the possible litigation of cryptocurrency within the United States by the vehicle of the FCC and FTC and the Congressional Review Board. Apparently, I imagine also that some of the chairpersons from the Federal Reserve and federal banking institutions in Wall Street and Goldman and Sachs and people will be present as advisors in an adversarial advisory capacity to the board to sort of assess what kind of market value and sort of potential the crypto coin and blockchain markets have. This is something that countries are very invested in investigating right now for several reasons, and I'm going to outline them herein. So the main reason that they would like to investigate these Bitcoin and cryptocurrency markets is because they're subjected to a large sort of infiltration, and they're very susceptible to sort of almost like an insider trading kind of market hedging and shorting and things of that nature. What has happened and why we've seen the recent spike in the Bitcoin market up from $4,000 to $19,600 within the course of maybe a month is because the company CME actually allowed cryptocurrencies like Bitcoin to be traded as futures, commodities, or future asset class markets, which means that companies, hedge funds, firms, individual traders can do things like go on CME's trading floor, website, whatever, and basically buy up contracts longing or shorting the market of Bitcoin value or cryptocurrency value. Specifically, in this case, CME allowed Bitcoin to be short or long traded. When you long trade something, it means that you're going to bet that it's going to succeed. You make a bet against a market, and this happens a lot. Like in the housing bubble, the CDO or the types of housing, the way the housing bubble was created was bets were placed upon other bets. Like, I bet this bet's going to fail, so I'm going to bet against it. That's an oversimplification of the way that the housing bubble became so massive and really collapsed the world economy. And then they were insuring these bad investments that were just a gamble in the first place. And then once one bet fails or the housing market starts to crash, go down in value, and homes no longer only increasing in value, and it starts to slide the other way, it basically means that all the bets that were made are going to be lost. All the bets that everybody else bet were going to keep, the housing market was going to keep proliferating in the same direction. All those bets were subsequently lost. And this is kind of the same kind of thing that could happen to a crypto market or a market that's not going to be regulated or not going to be at least watched by sort of financial advisors and that advise the government and, the Congress and, have their investments in this themselves, as well as the common, Joe citizen who might be investing and trying to play around with a little bit of capital he has. So that's one of the main reasons that these companies want to get in, or these countries want to get in and regulate the markets, is so that they can get a better hold on whether or not, criminal activity is going on, basically. It could be to the point where, hedge fund managers could go and try to get a bank to insure their bet that Bitcoin's going to continue to, keep rising against the S&P 500 at a rate of 5 points per year or whatever, and then they'll get paid out based on that bet subsequently. And then some guy will come along at the very end who's going to bet against the housing market. And this is a fun fact: the guy who made all those billions of dollars betting against the housing market collapsing, he shorted the housing market and made something like, I don't know, he made like $22 billion, $81 billion. That guy's now betting against water subsidies. Like, he buys stocks and shorts the water market, which is smart because South Africa is currently experiencing a water shortage. They're running out of water, which is a frightening concept. And large companies like large family interests that own large controlling interests in oil companies like the Bush family, they've done stuff historically like buy up the largest aquifer in South America, like sources of water. So it's pretty frightening, like that kind of trajectory to commoditize a resource that sort of is inherent to human life in a way. However, this is something, it's happening. So, and I don't want to get too gloom and doom on this because that's not really how I feel about the future. Anyway, the injection of a lot of fear in the markets is current with the Bitcoin markets. I mean, although it's everywhere and it's very prolific and everybody's got their hand out for your $10 to invest in Bitcoin, there's still a lot of fear being injected into the market by sort of skeptics. And a lot of the people who are in these futures markets are really people that are looking to short large markets and make money off the collapse of markets and assets and commodities, one of them being Bitcoin, one of them was the housing market. Okay. So they're betting that in the future that A or B is going to happen. It's going to go up or it's going to go down. It's a futures commodity, futures market. So what they've done effectively is they've gone in and they've bought contracts saying that we bet Bitcoin's going to go up. But we're only going to buy this contract from January to February. Okay. So all of a sudden in the month of January, the price of Bitcoin skyrockets. And go figure, because these large firms have gone in and bought in 1,000 contracts for, 100 firms have bought in 1,000 contracts saying that Bitcoin is going to go up in the month of January, and then their contract ends in February. Okay. So what they do is these large firms, or, a subsidiary of these large firms, goes in and buys a shit ton of Bitcoin, thus driving up the price of Bitcoin. It makes the resource of the asset class, it makes it scarcer, and then it makes it more, the trading is going on in the direction of buyer. It's a buyer's market. So people are going to want to buy quickly and jump on the train, and the price is rising. So they're making money not only off of their contracts that they've taken out, but they're making money on the Bitcoins, themselves as they drive the market up. So it pays out two ways then. And then they get to a certain point, which is like a magical number, because if it were to rise at a certain steady rate, other large investors and groups will take notice and buy in even larger. You know what I mean? Like, it could get away from the smaller firms or the smaller trading groups that are manipulating this market, and it could actually get picked up and then manipulated by a much larger entity, which they wouldn't want, because then they couldn't reproduce this result again. They would have somebody like Goldman Sachs step in and say, oh, no, small time. We're going to go ahead and we're just going to buy the market, and they control it that way. And if it got big enough, those entities will want to invest. These large banking entities are going to start to want to invest if the market, cap gets large enough. Okay. So they stopped it before it got to 20,000, which I find funny, because a lot of, financial analysts sort of projected Bitcoin, once it gets to 27,000, is when the real big whales, banking institutions and everything, will start to buy in and use it as gold 2.0, a repository of wealth online. Okay. So I've discussed that in other videos, and that's something else you can watch on my channel. On the channel's called projectterahash.com. Okay. Now, one thing I'm going to discuss also is the the blockchain network has got some problems basically going on with it. So it's hard to scale up the Bitcoin blockchain network, and you're actually having to pay an extra $2, here or there to get your transaction process faster, unless you're a really large transaction of Bitcoins, $200,000 in Bitcoin or something like that. It's taken you a couple of days even sometimes to get your transaction process, because the blockchain network is just very unscalable. There's not a lot of people that are participating in it, not to the magnitude that's needed currently. So they're going to have to do something about it. They're going to have to sort of patch it, or, create a new sort of fork of the Bitcoin currency. And there's actually the massive spike in the Bitcoin price came on the heels of the fork in which they forked off Bitcoin Cash, which is the next most expensive cryptocurrency behind Bitcoin itself. It's called Bitcoin Cash. It's a forked version of Bitcoin. They created two, okay, because the supply and demand wasn't there, so they wanted to make more of a supply to allow market share to increase. They created Bitcoin Cash, and they're going to do that 4 more times this year. And the dates are listed online. You can find them yourselves. I've only got 10 minutes to kind of dissert for you guys what I'm thinking today. So next time they fork the market, it's very likely that the investment groups and whales that bought in last time and long sold the market and then made money on the downslide as well, because they can take out contracts on whether the market succeeds or fails. So what they do is they take it out on both sides. They take it out, the contracts, the 1,000 contracts they can take out as the market is progressing up, and then they take 1,000 contracts out as the market's progressing down. And they force the market to go down by selling off the Bitcoins they bought during the rise. So in that way, they can manipulate the market. And this is one of the reasons why the governments want to regulate this, because they see the propensity for basically insider trading or massive manipulation of a market that can be used to fund even deep dark web terrorist states, like North Korea is using Bitcoin potentially to engage in espionage and, line the coffers of their sort of national treasury. So these are concerns and everything with the Bitcoin that are going on. But again, I would stay hopeful as I can about this market, because basically we're looking at something with the blockchain, networks, and Bitcoin being a repository of wealth online that's going to proliferate into the future very easily, and it's going to be something that's going to really sort of bolster humanity as a whole. So that's my 10 minutes, and I'll give it back to you guys. This is Luke, Project Terra Hash, out.